Welcome back, traders. After yesterday's modest breather we hashed out with DIA's break and XLE's coil, today served up a gap-down gut check that ended in doji drama, testing that 20-day MA on SPY like a true trader's riddle. Economic beats on durable goods and GDP handed bulls a fist bump, but with DXY roaring and BTC eyeing the range floor, is this the setup for a snapback or a slip deeper? You're tuned into the Stock Market Summary Series. We're going to get into what we're seeing in the charts, but before we do, just remember that none of this is buying or selling advice. We're just here to provide market commentary and trading education. Nothing we say here is financial advice. Also, if you're liking these videos, do us a solid and give us a like. We'd really appreciate it.
Yeah.
All right, with that said, let's get into it, y'all.
Okay, so let's unpack this daily action. Market gapped down pretty hard.
Yeah, it did.
But buyers and sellers kind of fought it out, right? Ended up closing the S&P 500 down, 0.46%?
Just under 0.5%, yeah.
And the big thing was that closed a really prominent doji candle. Lots of indecision there.
Yeah.
And sitting right on that 20-day moving average.
Exactly. And the fact it held intraday, well, that tells you it's a pretty critical spot right now, a key support line.
It is a critical hold, definitely. But, if you look kind of underneath the hood, it feels like serious risk aversion is creeping in.
How so?
Well, the NASDAQ and Dow were down, okay, modestly. But the Russell 2000, the IWM, that got hit hardest, dropped nearly a full percent.
Oosh. Small caps taking it on the chin again.
Yeah, and that weakness there just kind of amplifies those jitters we've been seeing, right, since Monday's highs. It suggests maybe the big money is pulling back from the riskier stuff.
And speaking of jitters, that U.S. dollar index, the DXY, it's just absolutely rocketing higher.
Oh, yeah.
Blew right through that resistance trend line we talked about. That was a big potential risk flag.
It was. And the implication here is, well, if the DXY keeps this momentum going, it acts like a vice, doesn't it? Squeezing everything priced in dollars. That includes U.S. stocks. So when the dollar gets this strong, this fast, it puts immediate pressure on the indices.
Even if they're flirting with support.
Exactly. Even if the domestic economy looks okay on paper, this dollar strength is a global headwind.
You could really see that technical pressure in the sector breakdown today. I mean, only energy managed to close green.
There's energy, yeah.
But some of the failures were pretty dramatic. Look at healthcare. XLV cratered 1.66%.
Right after teasing that upside breakout, too. Failed hard.
And basic materials, XLB, down 1.3%, just confirms nobody wants anything to do with that ascending triangle setup right now. Zero appetite.
Yeah, those pattern failures sting.
They do. But, okay, we always have to look for potential opportunities, right? And there are still some interesting setups. NVDA is coiling up really tight. Classic ascending triangle.
That one screens breakout potential, yeah.
Also, keep an eye on USA Rare Earth, USR. It's drawing some serious volume into a massive weekly ascending triangle. Big picture setup there.
Both of those could definitely ignite, for sure. But this is where, that trading wisdom comes in handy.
Okay.
We just watched XLV and XLB patterns fail spectacularly today. So you got to be realistic. If these NVDA or USR patterns fail, that's going to hurt too.
Right. I need to manage that risk.
It just underscores how crucial timing is, precision timing, and having bulletproof risk management techniques, which, is exactly the kind of detailed stuff we dive deep into in our Grok Trade mentorship program. Really focus on managing that risk edge.
Makes sense. All right, quick pause here. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later. Okay, shifting gears a bit, let's talk economics, because, wow, that gave the bulls something to hang on to today.
Yeah, some strong numbers.
Durable goods orders for August crushed expectations, came in at plus 2.0% versus the negative 0.5 they were looking for.
Huge beat. And Q2 GDP, the final number, ticked up too. Solid 3.0% growth.
Existing home sales also edged past consensus, so pretty solid stuff overall.
They were very solid beats, no doubt. It shows some real resilience, from consumers and industry. But this really sets up a potential conflict tomorrow.
Ah, right. The inflation data?
Exactly. We get core PCE, personal income, and personal spending. Huge release. That's going to tell us if inflation is staying tame enough for those rate cut hopes to stay alive. Or if spending is actually heating up again and maybe scares the Fed a little. Big pivot point.
Okay. Noted. Now, let's quickly hit crypto and metals. Bitcoin. Uh-oh.
Yeah. Took a dive, down about 3.6%. Kissed the lower end of that consolidation range, around 108K.
Should definitely need to stay nimble there. That 108K to 124K range is key.
Absolutely. But look at the metals. They're kind of confirming that underlying risk-off feel, wouldn't you say?
How so?
Well, gold, GLD, it was up slightly, 0.42%, holding firm. But silver, SLV, smashed higher, up over 3%.
Wow, 3% on silver.
Yeah, new swing highs near $46. Like precious metals are shouting, hey, remember us, we're the hedge. Especially when charts look dicey and the dollar's flexing.
Good point. So, wrapping it up for today, it felt like a really gritty test of resolve, didn't it? These doji dips right on major support.
Yeah, fighting against that strong dollar.
But also fighting against those surprisingly strong economic numbers.
Yeah.
Lots of cross currents.
Definitely.
All right, so here's your provocative thought to chew on. Drop your take in the comments. What breaks first? Does NVDA blast out of its triangle, signaling maybe some tech strength is returning? Or does this DXY rally just keep going and crush the whole rebound vibe?
Interesting question. Let us know what you think.
We'd love to hear it. All right, folks, have a great rest of your day, and we'll catch you back here for tomorrow's market summary.